On your screen are the category ranks of Invesco Mutual Funds Diversified Equity Funds. From a rank of 19 in 2023, Invesco's Contra Fund has jumped to the first position in 2024. Invesco's Large and Mid Cap Fund has jumped 4 places, from rank 9 to rank 4. Its Mid Cap Fund has jumped 20 places, from the 22nd position to the 2nd. Similar is the story with its Multi Cap and Small Cap funds too. What's more, many of the Invesco's equity funds had been at category dregs for multiple years. This situation changed in 2024. They are all the top rankers in their respective categories. Now, if we check the 2024 returns of Invesco's diversified equity funds, they are way ahead of the category average. All in all, Invesco's equity funds are on a tear. Now, what might be the reason for this outstanding performance lately? More importantly, can this performance sustain? Well, that's what we'll try to find in this video. Hello and welcome to ET Money's YouTube channel. In this video, we'll try to decode the reasons behind the recent stellar performance of funds from Invesco Mutual Fund. Now, if you want to watch more videos like this one, you can check our playlist on fund analysis and comparisons. The link is in the description. So, let's start with the first reason for turnaround of Invesco's equity funds. First, let's try to understand why all of Invesco's diversified equity funds staged a comeback together in 2024. The answer to this puzzle lies in their overlapping holdings. For instance, consider Invesco India Flexi Cap and Invesco India Focused Funds. As of December 2024, 66% of Invesco India Focused Fund holdings were the same as those of Invesco India Flexi Cap Fund. On the other hand, 34% of holdings of Invesco India Flexi Cap Fund were the same as those of Invesco India Focused Fund. The stocks common across both these schemes included Dixon Technologies, Global Health, HDFC Bank, Hitachi Energy, ICICI Bank and so on. Similarly, the overlap between Invesco India Flexi Cap and Invesco India Large and Mid Cap funds was high too. 58% of holdings of Flexi Cap Fund were the same as those of the Large and Mid Cap Fund, and the Large and Mid Cap Fund had 3/4 of its holdings the same as those of the Flexi Cap Fund. Both the funds had as many as 34 stocks common between them. And when we check the overlap between Invesco India Large and Mid Cap Fund and Multi Cap Fund, the degree of crisscross was high too, at 51% and 38% respectively. Both the funds had 22 stocks in common. Now, this significant overlap between Invesco's equity funds explains why all the Invesco's funds have turned around in tandem. Not just this, Invesco's diversified equity franchisee is managed by 6 fund managers. Their names overlap across scheme too. So naturally, their preferred type of stocks would be similar. For instance, both the Contra and FlexiCap funds have the same fund manager duo, Amit Ganatra and Tahir Badshah. Aditya Khemani co-manages the large and mid cap and small cap funds. Hiten Jain co-manages both focused and large cap funds. Now, one important point to note here, many of these executives started managing these funds only about a year back. It looks like Invesco India reshuffled fund managers towards the 2023 end. For example, Amit Ganatra started managing Contra Fund again in December 2023 after a gap of 3 years, and he took the reign of the mid cap fund in late 2023. Hiten Jain began managing large cap fund in December 2023. Now, another important point we must mention about the common stocks. Portfolio overlap isn't something that inflicts only Invesco's funds. It's a natural thing to happen irrespective of the AMC in question. Now, we found a similar issue with Motilal Oswal's funds too when we analyzed them in a recent video. Now, the reason for portfolio overlap is that most fund houses, including Invesco India, have an investment philosophy which determines what stocks they pick for their funds. Now, because of this investment philosophy, it's natural for the funds of an AMC to have similar stocks. Now, Invesco's India investment philosophy involves being true to the label at all times and applying a combination of bottom-up and top-down analysis. The fund house has a stock categorization framework too, which helps it segment stocks as per their characteristics. Now, these result in the same or similar stocks being picked across the equity funds. But from an investor standpoint, portfolio overlap can reduce the benefits of diversification and hence increase portfolio risk. To counter it, you should pick funds from different AMCs and categories. You can watch our video on portfolio overlap for more information. The link is in the description. Okay, now let's move to the next reason. In 2024, Invesco's equity funds broadly had high allocation to banking and finance, healthcare, IT, capital goods and auto sectors. Of these, as many as 4, healthcare, IT, capital goods and auto, turned out to be quite rewarding. Healthcare generated a return of 41%, IT and auto 24% each, and capital goods 23%. These returns were higher than those of Nifty 500. Financial services, which comprises banks and finance companies, lagged behind, but that didn't stop Invesco's funds from outperforming. Let's investigate this further and understand how Invesco played sectors differently than other fund houses. For this, we will examine the portfolio of Invesco Large and Mid Cap Fund, which is also one of the bigger schemes the fund house has. It's the second largest equity-oriented fund after Invesco India Contra. Now in January 2025, Invesco Large and Mid Cap Fund had higher exposure to 3 sectors than its peers. It had around 13% exposure to finance, healthcare and retailing. The category average for these 3 sectors was between 6 and 8%. This was also the only fund that invested in Interglobe Aviation that didn't fall much in January. But that's not all. It's also among very few funds that took exposure to real estate. While the overall real estate sector took a beating in January, Invesco large and mid-cap stocks like Max Estates and Phoenix Mills saw a limited correction during the month. Okay, let's move to the next point now. But before that, here is something important. If you're finding this video useful and would like to watch more such videos, do subscribe to the channel. And don't forget to press the bell icon so that you never miss a video from us. In this section, we will discuss 4 funds from Invesco India. We will examine the portfolio of FlexiCap fund, then large and mid-cap, followed by mid-cap and small-cap funds. Now, the stock selection should give us an understanding of the investment style of the funds. Let's start with the FlexiCap fund. In January, the fund exited stocks such as Avenue Supermart, Kalyan Jewellers, KPI Technologies, and Netweb Technologies. Now, most of these stocks were the momentum stocks of 2024. So on first impression, it feels like the fund follows the momentum strategy. When we saw the stocks that fund entered and exited in another months of 2024, it was the same story. Now, since the fund started in February 2022, ICICI Bank, Infosys and HDFC Bank are 3 stocks in the fund's top holdings. All this points towards the fund heavily leaning on momentum plus growth stocks. Next, we check the portfolio of large and mid-cap fund, which was launched in 2007. Here too, the fund manager used part of the portfolio for momentum strategy. For example, it exited investments in momentum stocks like FSN E-commerce Ventures, Kalyan Jewellers India, etc. last year. In fact, even in the case of large and mid-cap fund, there are 7 stocks that the fund manager has held for over 5 years. Now, in the case of mid-cap fund, the picture is slightly different. Stock buying and selling don't seem to be very driven heavily by momentum. Instead, the fund manager seems to follow more of growth investing. We also compared the current top holdings with the portfolio 5 years ago. Around 3 companies remained in the portfolio for over 5 years. These include Cholamandalam Investments and Finance, AI Engineering, and UNO Minda. Finally, let's move to the small cap fund and understand the investment style. Now, the strategy of this fund is very similar to that of mid cap fund. Among major holdings, there are only 3 stocks that the fund has held for over 5 years. Now, usually, if a fund follows momentum and growth strategies, it often buys and sells stocks. That's because both the strategies require the fund to ride the winners and exit them as soon as they go out of favor or their growth starts to see a slowdown. So, we check the turnover ratio of Invesco India's funds. This metric tells us how often the funds buy and sell stocks. A turnover ratio of 100 mean the fund has changed its entire portfolio in the past year. Now, the turnover ratio of most funds from Invesco India is somewhere close to the category average. Yet, they are slightly on the higher side. For example, the turnover ratio of Invesco India Multicap Fund is 117. The average turnover ratio of multicap funds is 67. The ratio for FlexiCap, Contra and large and mid-cap is in the 70s, while the category average for each is between 70 and 90. Surprisingly, mid-cap and small-cap fund are exceptions here with a turnover ratio of 54 and 32 respectively. All in all, we can see that there is a frequent and buying selling in most funds, which indicates a blend of growth and momentum investing. And this brings us to the next point. In the previous section, we saw that Invesco fund leans towards momentum and growth investing. Growth stocks typically have high valuation multiples. Now we will use a valuation metric called the price to earnings ratio or the PE. Normally a high PE denotes a growth orientation. Now all of Invesco's equity funds have maintained PE upwards of 40. These PEs have also risen over the last year. Now a look at the December end portfolio PEs can tell us where the PEs have reached lately. The mid-cap fund has a PE of 79 times, the focus fund has a PE of 73 times, the large and mid-cap funds stand at 70 times. So overall the P's appear to be quite high in the absolute terms. We have excluded the contra fund here as it has a stated contrarian or value mandate. Alright, let's compare these multiples with the P's of many market indices. The P's have remained upwards of 20, but they haven't reached the levels of portfolio PE of Invesco's funds. A look at the December end P's can help assess the recent picture. The P's are much lower than those of Invesco equity funds. This suggests that Invesco funds have followed a growth style of investing. Now, growth stocks do well during bull runs and times of optimism, which was the case in 2024. So, the growth orientation of Invesco's funds has possibly worked well for them. This is apparent if we look at the 2024 returns of the top stocks which have stayed for much of the year in Invesco's flexi, mid and small cap funds. Stocks like Coforge, M&M, Trent, Zomato, BSE, Dixon Technologies, Interglobe Aviation, Max Healthcare, 361 WAM, Aditya Birla Real Estate, CDSL, Kalyan Jewellers, Krishna Institute, and PG Electroplast have proved to be highly rewarding for the three funds. So, Invesco India's investment strategy in well-performing stocks has played a key role in their turnaround. But it was until 2024. What about 2025? Can Invesco India's funds maintain their winning streak in 2025 too? Let's try to answer this question in the concluding section of the video. As we discussed in this video, there are four possible reasons for the outperformance by Invesco's equity funds. First is the significant portfolio, fund manager and style overlap that resulted in all equity funds outperforming in sync. Second is the bang on sectoral calls taken by the funds. The funds maintained high weights to healthcare, auto, IT and capital goods sector. These sectors did well in 2024. Third is the growth plus momentum investing strategy that proved rewarding for the funds as the top bets also generated good returns in 2024. But the funds have not been able to really weather the recent market corrections. This year, as of February 12, 2025, the Nifty 100, Nifty 500, Nifty Mid Cap 150 and Nifty Small Cap 250 indices have dipped by 4, 7, 11 and 15% respectively. During this period, Invesco's equity funds have fallen from 7 to 14%. Amid market corrections, growth investing and high momentum and high P stocks often tend to get hammered. So, if schemes from Invesco India are on your radar, do keep a tab on their performance amid the ongoing market correction. This will be a true test of the asset management company and its fund managers. And with this, we have come to the end of this video. I hope you found this video useful, and if you did, please share it with your friends and family. I'll be back soon with another video. Till then, take care.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.